This is the Friday, November 16th, 2012 version of the Market Plus segment. Joining us now is Darren Newsom. Darren, welcome back.
Thank you, Mike.
We've got a lot of great questions from Twitter. Obviously, a lot of people are very curious about what to do in this environment. And it seems like Tim in Crookston, Minnesota, has some issues that he'd like to help you have helped answered. He's saying, how long before the market shakes this funk? I want to sell wheat, beans, and corn. Daddy's got bills to pay. How can we help him pay those bills?
Yeah, that's a great question. How long is this thing going to last? In the show, we referenced Newton's first law of motion, and I truly believe that when you can apply it to trends. I don't think these trends are going to change. I don't think the motion in these markets, the direction of these markets are going to change until we can change the investor's outlook on markets as a whole, until we erase some of this uncertainty. Now, if we look at price, we've probably done about as much damage as we can, or moved the market about as low as we're going to right now for soybeans. But you never know. I mean, they could come in next week with another round of selling. We've already seen a huge amount of liquidation in the soybean market, a decent amount of liquidation in the corn. Until we get signals that this momentum is starting to change, it's hard to say, the bottom is in. But I do feel like we're probably getting close.
As far as things that could change this momentum, we talked a lot on the show about the fiscal cliff. Getting that resolved, do you think that would be a positive thing, or is that something the market's kind of already priced in?
No, I think that if this financial problem, I'm not going to say the financial problem is going to be solved by the end of the year, but let's say the U.S. government works together, the different houses of the government, branches of the government work together, and we do reach some sort of negotiated, I'm not going to say negotiated peace, but some sort of agreement. I think the markets will react. I think it removes one layer of that uncertainty. I think the stock market comes back, and if people get, and if traders get, and investors get interested in the stock market, and I think that spills over into commodities, I think you just see the investment community as a whole start to firm up a bit.
All right, and that leads almost directly into the next question. Rodney from Edgar, Wisconsin is asking basically the inverse of that. If things aren't resolved, the stock market continues to fall, will corn and beans follow that downward direction? Also, will pork and beef follow it down, and how low will pork and beef go?
The interesting thing is that investors usually look for markets that have strong fundamentals. When we start to see buying again in commodities, it has to do with strong fundamentals, bullish fundamentals. Two really come to mind. That would be soybeans and live cattle long term. Again, the cattle on feed report again today showed the lower numbers. It was expected, but if we look long term in that market, it is just kind of reflecting the idea that we're going to have tighter supplies. Getting people interested in those markets. So if we don't have an agreement, and if we see the investment community as a whole remain afraid of any type of market situation, I think it's going to be tough to draw money back in for quite some time.
Well, and the flip side of that, you kind of raised an interesting issue. As we look at beans and live cattle, they do seem like good investment prospects over the long term. If we see a continued slide in the other markets, might money move into those, or is that just not the way it works?
No, that is the way it works. We do see money shifting from one market to the other, and I think that, in the long run, that could certainly help, because I do think money's going to gravitate towards these markets, but we still have to remove some of this uncertainty, that maybe we're going to raise interest rates, Fed fund rate's going to come up, dollar's going to continue to strengthen, and then at that point, no one wants to own commodities, basically regardless of what the fundamental situation is.
Right. All right, we'll change the topic here. Siouxland Energy is asking, how is the U.S. corn price in comparison to the rest of the world? Do we have the most expensive corn in the world?
We may have, if we look at it right now, we may have some of the most expensive corn. Right now, we have a very strong basis. We've seen a very solid cash market. The corn futures have backed down, and we've seen the cash gain on futures over the past many weeks. So, we could probably, that argument could probably be made, but we also have to remember, in a normal year, the U.S. is the #1 producer, exporter, and user of corn as well. So, maybe we are the most expensive in town, but we're also usually the only game in town, and it's where the rest of the world usually comes to get its corn.
All right, so its relevance really can't be measured by price.
I've never really looked at corn that way. I think that argument holds more in soybeans, where you've got U.S., you've got Brazil. You take your turns in South America as a whole. You take your turns exporting. Certainly in wheat, it's that way. It's measured by which one's more expensive, because wheat can be grown anywhere except for this year.
All right. Well, we had a little break on the questions relating to the uncertainty, but now we're back.
Back to it.
Phil in Ontario is asking, we used to have seasonality in prices caused by the fundamentals. Is there a seasonality for non-commercials? With non-commercial spec demand, isn't it impossible to predict a seasonality behavior in prices?
You know, it's a great question. One of the studies I'm going to do is to look at these trends in seasonality, trends in movement of money, non-commercial activity. Seasonality of the markets as a whole, I think, has changed. I don't think it's as a reliable a factor as it used to be. I think the reliance on fundamentals is not what it used to be, and certainly we've seen that play out in many of the markets here over the last couple of months. I think it has more to do with the money flow, and if we can figure out times of years when money actually starts to move back and forth, you know, crisscrossing in different markets, that could be the next phase of seasonality, rather than just looking at a particular market and trying to watch for its supply and demand cycle.
So long term, that represents a fundamental shift
It does.
in how markets are traded.
Yeah.
What's going to be a good way for producers to kind of keep track of this stuff?
Well, the biggest way they can use it is as long as we have the same amount of interest or the same amount of participation by investors and investment funds and so on in commodities, we have to start to understand why and when they move, and not necessarily when cash grain or cash supplies move. So it is a fundamental shift. And going back to 2006, the dynamics have changed. This is just the next step. So these types of studies, these types of understandings of the market, I think, are the next level that we're going to have to go to.
And so it's just going to take time to get that understanding down to where a level of
and then it will
seasonality was
change
prior.
because, you know, with all of this computer trade based on algorithms, you'll never actually quite figure out when they pull the trigger, because there may not be a set time. There may not be anything but a strange coincidence if you start to see a seasonal cycle.
All right. We've got one final question here. Jeremy in Oneida, South Dakota is asking, fundamentally, should or could grains make new highs if funds get back on board, or has that ship sailed?
Most likely, that ship has sailed. The one market that's out there that still could may be soybeans. And that's if anything happens to the South American crop. You know, again, right now we're talking about record production, both Brazil and Argentina. If that doesn't come to pass, if they have some sort of harvest delays, if they have any kind of weather problem at all, I think the soybean market could catch fire again. I think it's going to be very difficult for corn to do, because we are seeing demand whittled away, and the wheat situation just doesn't seem to be as tight. And you never know what headline to believe in the wheat market, but if we look at the future spreads of forward curves, at least for this year, it doesn't look like the wheat's that concerned over supply and demand. But now we're going to get into next year and our ongoing dry situation for our own winter wheat crop, which could light a fire under next year's crop.
And that brings me to one more question. You mentioned the ongoing dry situation that we're seeing in the Western Corn Belt and under over wheat acres. What's your thoughts on how long is that going to last? Is there relief out there in the future?
You look at how far behind most of the Midwest, and let's take one step back. The heart of the drought moved from the southern plains up into the Kansas, Nebraska area, where it's sitting as we head into winter. So now, you know, we've got the fringes of this drought now reaching further into the Corn Belt this year than it was last year at this time. So it's going to take an extraordinarily wet winter over much of that area to even start to rebuild the soil moisture heading into next spring. And I think that's going to be critical, because if that doesn't happen, then we're starting next spring off in a worse situation than what we did this year. And so if it turns hot and dry, we have less to fall back on. So I don't think we're out of the woods. I think it's going to take an extraordinarily wet winter to even get us close to a good starting point next year. And that's just something that's not being forecast right now.
All right. All right, well, something to keep our eyes open for.
Yeah, sure.
Thank you so much for being here, Darren. Appreciate it. Thank you all so much for watching the Market Plus segment. Remember to keep sending in your questions via Twitter and Facebook, and pretty soon I'll be on Twitter, so we'll be able to have a conversation. I'm learning all about technology. It's wonderful. Thanks so much for watching, and have a great week.